Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Lots of folks start out investing little by little, a house here, a house there, but perhaps it's time for you to step up to bigger deals. Today we'll talk about different ways to do that, and you'll meet a great guest who's been helping people to step up in real estate for many, many years on the Real Estate Guys radio program. The Real Estate Guys are throwing a party and you're invited. Join us live at the New Orleans Investment Conference, October 12th through 15th. Now in its 48th year, it's the nation's longest running investment conference and features some of the biggest names in economics and investing, including Jim Rickards, Danielle DiMartino Booth, Rick Rule, Doug Casey, James Grant, and George Gammon. And of course, the Real Estate Guys are speaking again this year. Plus, we're hosting an awesome party one of the evenings with some very special guests. So make plans today to join the Real Estate Guys at the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. Joining me, as he normally does, our co-host and financial strategist, Russell Gray.
Hey, Robert.
A lot of people invest in real estate on the side. They buy a rental house every 3 or 4 years, and if they keep doing that, well, they're going to be happy and their kids are going to be happy because over time, equity happens. The payment gets made by the tenant and the loan amount decreases. There's positive cash flow, and then the property is valued at more. And that is a way to get wealthy in real estate. But today, we're going to talk about stepping it up. Not everybody wants to take a linear approach to getting wealthy in real estate. Some people want to go bigger, faster.
Yeah, absolutely. I mean, when you think about the reasons why you invest in real estate, it is to find a way to grow at a pace faster than inflation. And right now, inflation is a real consideration. There's investors out there that if they want to have a conservative investment and they want to buy bonds or something fairly conservative, an insurance annuity or something like that, inflation is a real consideration because their net yield after inflation is sometimes not positive, it's negative. And so the question is where else can you go that's fairly conservative? Real estate for ages has been considered a conservative investment. And the most conservative is you pay cash for a property. You have no leverage whatsoever. You take a big chunk of your money, you buy a property, and it's an alternative way to hold wealth. It's not very liquid, but it is very secure against a lot of different types of economic system and currency collapses and so on. But to speed things up, usually you have to add other things into the mix. And one of them, usually the next one, is getting the tenant to bring you income and then leveraging that income into debt. In other words, you're going to get a loan and you're going to use other people's money in the form of debt from a bank or maybe a private lender.
You know, I think a lot of our listeners would be surprised to know that more than half the houses in America don't have debt on them. As real estate investors, we think, well, of course you're going to buy a property with debt. You're going to put 20% down and get a loan, and that makes sense for all the reasons we love leverage. But in reality, that's not how most real estate is purchased. As we expand our view around the globe, where the Real Estate Guys are heard in more than 190 countries, in many countries, there is no mortgage financing available. Cash is what there is. So to your point, Russ, the next kind of space to go is to consider mortgages. Now, you maybe already have a mortgage on your home and you get up and you create income to pay for that mortgage. But it's different with your rental property. With your rental property, the tenant or tenants have to pay not just for the costs of running the building, but also for the leverage. Now, the good news is leverage magnifies returns.
Yeah, that's the key. You know, if you put 25% down on an investment property, very conservative, you know, you can get a 75% loan, you put 25% down. That means you're controlling 4 parts of property, 100 times 25, or 4 times 25 is 100%. So if you have 4 25% slices, that's 100% of the property. One of those 25% slices is your equity, your down payment, your purchase equity. The other 3 slices, the 25 plus 25 plus 25 is 75%. That's the loan. But when the equity grows, let's say it grows by 10%, $10,000 on a $100,000 property, then that $10,000 adds to the $25,000 you put down, And so that is your passive equity. So you had your purchase equity that you put down, and then you get your passive equity that came from the property. The debt, the lender gets none of that. And so when you look at your return on investment, gee, I made $10,000 on $25,000. So that's like a 40% or something return or growth on your equity. And so that's why we use leverage. 40% in today's environment, at least so far, will by far outstrip inflation. And so now you've got an inflation hedged investment. You're using the debt to magnify the inflation of the property so that your wealth is growing faster than the inflation rate is deteriorating the purchasing power of your wealth.
Now, the next way to kind of step it up is to buy bigger stuff, more units. If you are going to buy a piece of property in a market, buying more units gives you more of a foothold, and there are generally loans available. In fact, apartment loans tend to be some of the very best loans there are in terms of rates and flexibility and everything else. So it may be that stepping up for you means I need to get out of the little greenhouse business and step up to the red hotel.
Yeah, and the challenge there, of course, is at some point, most investors, once they figure out the basics of making money in real estate, they first run out of down payment, and then they run out of the ability to borrow. And so you've used up all your credit, you've used up all your down payment, and you still see more deals in the marketplace. And if you're trying to diversify in terms of marketplace, in terms of number of tenants, in terms of exposure to specific asset classes or sub-niches within real estate, retail is different than office, is different than residential small versus apartments versus mobile home parks versus, say, residential assisted living or farmland. The list goes on. And as you start to put that diversification in your portfolio, unless you have a really, really, really big portfolio, you're not going to be able to do it with your own resources. Of course, there's a whole lot of other people out there that have the exact same problem, and the obvious answer is to get together and try to find a way to have and enjoy the diversification by owning smaller pieces of a bigger portfolio.
Anyone who listens to our show knows we're big fans of the concept of real estate syndication, that is putting together these bigger deals by aggregating resources from different people. Some people find the deals, some people have the land, some people bring in capital, whatever it is, and then you split not only the revenue from cash flow, but the eventual growth of equity, tax benefits, all kinds of things. And it's an exciting area. The challenge is this, though, when you step over the line, and on the first half of the line is you investing in your own account with your money and you qualifying for the loan, to raising capital, asking other people to come along, even if it's just your brother-in-law or your college roommate, you go together and buy a house. Now it becomes a little more complicated. It's not scary, it's not awful, it's not overwhelming, but it does trigger some legal issues. And today we've got a guest on the program who's had to navigate all of this because he spent 20 years syndicating deals. Now, at the time he was doing this, there were different reasons. There were some real tax benefits during part of his tenure as a syndicator, but he developed a passion for helping at first real estate agents and then normal folks figuring out syndication. Today, he's an attorney that helps people put together these deals. When we come back, our friend Gene Trowbridge on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
As real estate investors, it's no secret that the Real Estate Guys love Florida, and the Sunshine State continues to receive more than its fair share of businesses and population relocating from the Northeast, which has created a huge opportunity for real estate investors. So come join Russ and me in mid-August for our Jacksonville, Palm Coast, Ocala field trip. On this highly interactive trip, you'll get an up-close, hands-on, personal experience you'd be hard-pressed to find elsewhere. You'll feel the vibrancy of the markets, observe the quality of the infrastructure, and truly get a sense for the demographics, all things you just can't do by simply searching online. Plus, we'll introduce you to our Boots on the Ground team, and you'll meet some amazing investors from all over. To reserve your spot, go to realestateguysradio.com and click Events, where you'll find the Jacksonville field trip. There's a big difference between researching a market from afar and seeing it with your own eyes. So join the Real Estate Guys as we explore not one, but 3 amazing real estate markets. Go to realestateguysradio.com and click Events for the Jacksonville, Palm Coast, Ocala field trip. See you there.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Homebuyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A+ rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
Hi, this is Frank Holmes, Chief Investment Officer and CEO of U.S. Global Investors, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Heard every weekend on this great radio station all the time at realestateguysradio.com. We're talking today about putting together bigger deals, coming up with the money and the property and the investors. And to do that, of course, you have to have your legal ducks in a row. Let's welcome a good friend of ours who knows a lot about that. It's Gene Trowbridge. Hey, Gene, how are you?
Fine, Robert. Thanks for having me.
Hey, it's good to have you. You started syndicating before people knew what the word was.
True. I had to educate a whole generation of real estate brokers that the wrong question to ask was, I want to put together this, but I don't want to do a syndication. The question is, I'm going to do a syndication, but maybe I don't want to do a security, or at least I want to know if I've gone into that business.
Yeah, and take us back to those days, because back then it was kind of the Wild West. There was the tax incentives that changed, and people were looking for real estate for the reasons we still like it today, but maybe for other reasons. And a lot of these brokers were putting together deals. So what was it like when you first started?
Well, I spent about 15 years as a commercial real estate broker. And then I went into being a syndicator for 20 years. That was an education experience because that was actually before Reg D was out. A lot of the rules it was the wild, wild west. Yeah. We were just going ahead. We had to take investors who were only smart or rich, and that's the only definition we had. So how did we do that? And I decided that I would stop being a broker and I would help people invest who weren't able to invest. That was really my key. And I thought that I would be better off being a fiduciary to people than just being an agent.
Yeah. And that's a great distinction. You know, no investor left behind. We have a lot of sophisticated folks that listen, but that is a really important distinction. When you're the agent, you're representing somebody, you're getting paid a commission, that's disclosed, but fiduciary is a higher level. Can you talk to that?
Much higher. You know, you sell someone a building, you hand the keys to them, you collect your commission check, and maybe you never see them again. In a syndication, they're going to give you their money. Technically, they don't, but that's what they think, and you have to deal with it like that.
Right.
So all the way, when you have their money in the deal, you're thinking about them. I was uniquely cut out for that, much more so than being just a deal maker.
Yeah. So that gave you kind of a unique seat. And from there, tell us about the rest of the path, because you didn't take a traditional path into what you do now.
No, I didn't. As I said, I was a syndicator for about 20 years. And one day I went home and sat with my wife at the kitchen table where, Robert, all the good decisions in life are made.
Yes.
And I'm coming up on my 50th anniversary this year. So I said to Kay, I am tired of dealing with partners. It's overwhelming. I had sent out 1,800 K1s. Wow. That was all manual back then. Yeah. It was very, very difficult. And I said, you know what I've always wanted to do, what my dad never got to do, is go to law school. So I'm going to do that. I'm going to go full-time to law school. We've got money coming in. I've got properties. I'm still going to be a syndicator, but it's just managing. And Kay was working at Target, and the two kids were in grade school. And I went off to law school at 45 years old. And I was going to do that till I was 60, and then I was going to retire. Okay, so I'm 73 today, and I'm still doing it.
You're still at it.
I love it.
And you literally have written the book about real estate syndication, right? Your first book came out in 2005, and we're now on the 4th edition because things change and it gets updated. But we just had you at our Secrets of Successful Syndication, and we asked people to raise their hand if they'd read your book, and it was a third of the audience. So
amazing.
Yeah, great work there. But what I appreciate about the book, and we'll talk more about it in a bit, is just it comes from a guy who's done it, not from somebody who just teaches it. And that's an important distinction. I think you have the credibility having done so many deals, but recognizing where some of the pitfalls are. So take us through that, because what happens is the evolution of an investor is often they deploy their own capital, they maybe get Fannie and Freddie'd out, and for them, the next opportunity might be to bring in investors. But as soon as you cross that line, everything changes.
Well, that's true. You know, I've done a lot of interviews of my clients, and I always start with, how did you get in the business?
Yeah.
And Robert, generally the answer is, I didn't have enough money of my own to do that deal that I saw over there that I wanted to do.
Yeah.
And I knew enough people that knew what I was doing in the real estate business that I thought I could raise some money from them. So where do I go from there, Gene? Hire me. What the heck?
Well, yeah, because they're interested in the real estate, the performance, the cash flow, the deal, maybe the tax benefits. Everyone treats the legal thing as just, something I got to do. But if you get the wrong attorney, or you don't get an attorney, right? We have people sometimes look back and go, man, I had to rely on the good deal defense. My paperwork wasn't correct, and I should have done it this way. But much better to talk to the attorney first. So when someone comes to you and they're ready to make that jump from owning in their own account to raising money, what are the key important things they have to be aware of?
Well, I think, first of all, you can't do it yourself. I think continuity is the number one question a passive investor should ask. Robert, I'd love to invest in your deal, but what happens if something happens to you?
Great question.
So my company policy is we won't take a client who insists on being an individual, certainly an individual unprotected managing member. They can tell me all you want about your property management business and whatever, but there's only one person who can sign and deal with the bank, and it's the managing member. If something happens to that person, where are you? You know, if COVID happens and you're the individual managing member and you transpire, which I don't know if that was a good word, but you're gone.
Right.
What do your investors do? You've left them in the cold. And I've been a substitute general partner or managing member 7 times, Robert.
Okay, so this does
when
happen.
Bad things happen, and it's not always death. It's bankruptcy, it's divorce, it's lawsuits, it's disappearance.
Right.
So I know people get hurt when the controlling person loses their ability to do the control.
That's a golden nugget right off the bat, and you really do need to think that way. It's one of the many things that is different when you're investing in your own account. You know, people will have an estate plan, and they'll sit with an attorney, and they'll say, well, okay, we've got our property, and it's bringing some cash in, and one day we want to go to the kids. But when you've got investors, and it's an active deal, and you're flying on airplanes and driving in cars, right, it is a liability.
That's the very first thing, and I learned that. I raised my money through the broker-dealer community.
Right.
That was part of their due diligence. Who was going to be around if you're not around, and what's the continuity? So that's very strong. I think the next thing I want to talk to them about is, what have you done in your business? You're going to have an investor ask you, Robert, have you done this before?
Yeah.
And we've all had to say no, comma, but... And I want to know what the but is. Yeah. What have you done in your real estate career that would make your first deal be a success, because you can go to talk to people you know and have seen what you do and maybe would like to do that, but you never asked them because you never were in a position. I had that situation in my life, the dry cleaner I went to for a long, long time. And one day he asked me what I did. And I'm a pretty savvy guy. So here's a person in the world I haven't told what I did. And I said, well, I put together these things. I was building self-storage. Oh, gosh, is there any way I could get in that? other than saying no, I said, certainly. And by the time it was over, he had invested $300,000 with me 10 times.
Wow.
Now let's talk about what's your makeup when you're managing $3 million of someone's money. So I'd like to talk to you about that. How do you feel about that? Because that's what drove me from the business, the care and maintenance of partners.
Yeah, and it's such a point because we see it happen in our world all the time. Someone makes this jump and all of a sudden they find success, right? You met a couple of our students this weekend who have raised $50 million, $100 million, $500 million, and money changes some people. So the time to think about that is ahead of time. And
That's
it's not
right.
just the money that you're the fiduciary of. That's super important. But what about you? You're making a chunk, right? And if you're not grounded, if you haven't figured out what you're all about, it's not just all about the legality of the deal.
And then the last thing I really ask them, that an investor's going to ask them, is are they going to be able to have any skin in the game? And that isn't always just the cash that they put in. It can be the fact that they're going to sign the mortgage. That signature is a value.
You better do.
So let's be able to have a story to go to the investors. And then when we have those three questions answered, I want to concentrate on my client doing a relatively small, specific deal so you can go through the whole process. You have a plan, we get the paperwork, you raise the money, you implement your plan, and now at the end of the quarter, you send out a report. So when someone says, have you done that? You say, hell yes, once.
Yep, I've done it.
That's all you need, but you need to get through that, and you really need to count on your relationships to get through that first one.
Yeah, I love that approach. Our friend Kyle Wilson says to test small. He usually is referring to marketing rather than go take a huge budget and go do something. Test small. If it works, you can do more. The idea of starting small as a syndicator. You know, we talk about going big in syndication, but it's not go instantly big. You do have to cut your teeth, and you're building what we call your experience resume while you do it.
That's right, Robert. And I tell the people that if this works for you after your third deal, you might have 100 investors. And let's stop then and think, is that the path you want to go on? I know when I left, I had 850 investors. On an average, we're in 2 or more deals of mine. And there was a slide this week that I saw, someone standing in front of a brick wall, and I don't remember what the caption was, but I remember, well, that was me when I sat at the kitchen table with my wife. I'm running up against a wall.
Yeah.
And I need to get on the other side of the wall for the next 15 years. And the way I'm going to do it is I'm going to jettison partners.
Yeah.
And that's okay.
Sure.
That's okay.
Yeah, and that's part of the evolution of an investor. I know when I started investing, I had been an on-site residential manager at a C-class apartment building. So I started investing in C-class. I was good at it. I knew tenant landlord law. It was great. And then I got to a point where I just don't really want to have a lot of my life energy around C-class tenants. And today we do a very, very different thing in real estate that's much more on the A-class side. So we evolve, and you're going to evolve as a syndicator. Now, the reason we always bring up the legal side, and people don't focus on that first, but it's the most important thing because it keeps you out of trouble, it keeps you out of jail, and it keeps your investors protected. So when someone has a deal, they are not maybe familiar with all the documentation and so forth. So take us through that. They sit in your office and they go, Gene, I've got this awesome apartment deal. And it's got great cash flow and the market's awesome. We've got upside. We're going to raise CapEx and we're going to do this. We're going to do that. Now you have to get them to the point where they can legally raise the money to do it.
I always start with a deal structure interview. I have about 8 pages of questions that I'm going to ask them and take them through how is this going to be structured? What are you going to do? Have you thought about this or whatever before we draft anything?
Yeah.
That deal structure interview is my blueprint on how I'm going to draft their documents. And then when they hear all those questions, they start understanding all the things I'm going to talk about in the documents, and it makes it quite a bit easier. The one document is a disclosure. You just simply have to, I call it, it's the story.
Yeah.
You have to tell the investors the story of what you're doing. And I always draft that first and send it to my clients and say, do I have this right? Because if I have this right, moving to the rules,
Yeah.
which is the operating agreement, is easy. If I have it wrong, and I've drafted all 3 of my documents, it's wrong 3 different times. So let's just get it right the first time. And so there's the story, and then there's the rules. And once you tell the story, which has all the disclosures and everything in it, scares the hell out of you. Now you have their money and you start running things. Now the rules become your Bible. Yeah. This is how you do it. And then there's another document that is really the investor's offer to you to invest in your deal. And it's called a subscription booklet. Robert, I'd like to subscribe to your deal. If you accept me, give me the wiring instructions and I'll send you the $50,000.
Yeah.
And in that subscription agreement in my company, that's the only thing the investors sign. But they say, I've read everything.
Right.
Yeah, sure. I wish the sponsor had read everything.
Yeah, exactly.
So I've read everything, and I've had a chance to ask all the questions I can ask, and I'm ready to go, and I'm signing. So it's just one signature, and then you accept them, or you don't, and there's nothing wrong with discriminating against who you take in as an investor.
Yeah.
You can do that, and we're off and running. So there are really 3 documents unless you get into a more complicated deal.
And it's really not that hard, but you brought up a great point, which is what we always tell syndicators. Make sure you've read the documents. And because most attorneys charge a flat fee for this service, the first time out, I'm going to guess they're going to have more questions and it's going to take more of your time. But just like in the syndication business, people come back and invest more. I know a lot of your clients come back and do more and more and more deals.
Absolutely. No, on my fee agreement, if it's a first time deal, I write in there the expectation of when we're going to be through with this is a week longer than if it's a repeat deal, because you've never done this before. So we better spend some time reading it. And if you're not going to ask me to go through it with you, Robert, I'm going to call you. And I'm going to say, what did you think about that dispute resolution clause?
Yeah.
Which you haven't read.
The what? Let me get back to you on that, Gene.
No, so I think that's important, and that all comes from my days of being a syndicator and working with different law firms on my documents, and how did different attorneys treat me, and how did I want to start treating my clients. So I'm an attorney mentor.
Yeah.
Much more than just an attorney, and that's why I have so many clients stick with me over and over and over, because we become a team.
Yep, absolutely. And it is easier on both sides once you develop a working relationship. They've seen your documents, you've seen their deals, and you can continue to down that path. It also becomes easier as a syndicator to know, all right, my law firm has my back. Now let's talk about this. So you represent the syndicator. Many times the investors that come in, we tell them you should have your counsel review this. So tell us how that works. And do those attorneys ever reach out to you, or is that between the investor and whoever they might hire?
Well, in our firm, our policy is that we only represent the syndicator. We only represent the sponsor. So ideally, no investor would know who I am, where I am, how to get a hold of me. If the investor has a question on the documents, they should ask the sponsor. The sponsor should ask me, because the sponsor hasn't read the documents, how we answer the question. And then I will say to the sponsor, if you're talking to your investor and you're doing the best you can do to explain that, and it doesn't seem like it's fitting, let's get on the phone.
Yeah.
I'm not going to represent the investor, but I will talk to them. I think it's very unlikely that the investors take our advice, and we put it in bold several times in the documents to consult your own people. I don't see that happening.
Our guest today is attorney Gene Trowbridge. He helps folks put together deals of all kinds. He's got an awesome book out. It's in its 4th printing. It's called It's a Whole New Business. We come back, we'll play real estate trivia, and you can win an autographed copy. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from August 26th to 29th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. Demand for offshore real estate has skyrocketed since the coronavirus shutdown, and with retirees looking for lifestyle, the work-from-home workforce able to be productive from afar, and tourism coming back strong, now may be the perfect time to consider Belize as a place to diversify risk in your investment portfolio. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and real estate contracts are in English. And at Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in August in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, August 26th to 29th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hi, this is Peter Schiff, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio show. Thanks for tuning into the program. You know, the 20th Annual Investors Summit has been sold out since March, but there's still a chance you might get in if you're serious about it. Go to the website at realestateguysradio.com and click on Summit, and there you'll get on the waiting list. And as we get closer, there's always a chance we can make room for you. You'll have to move quick, but if you don't want to miss the 20th Annual Investor Summit, get on the waiting list and who knows, maybe we'll see you in beautiful Belize. We're talking with attorney Gene Trowbridge today about stepping up to bigger deals. There's lots of ways to do that. Of course, Gene helps people with syndication. Before we get back to that interview, it's time to play real estate trivia. That's your chance to win a prize by knowing our real estate trivia question for today, and it's a good one. But the prize is a good one. The first person that gets the right answer is going to get an autographed copy of Gene Trowbridge's awesome book called It's a Whole New Business. It's the 4th edition. It's signed by Gene. That can be yours if you know today's real estate trivia question. When you hear the question and think you know the answer, simply send an email to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Last week on the Real Estate Guys, we had 6-decade investor Tom K. Wilson, and we asked this: when did Silicon Valley get its name? Well, it was back in 1971. The name Silicon Valley was first used by Don Hoffler in his newspaper article at the Electronic News in January of 1971. The article discussed how IBM computers and other electronic devices were making a huge wave in that decade. Here's our real estate trivia question for this week. Last week we had Tom Wilson from California. This week, Gene Trowbridge, who is a practicing attorney in California. So we thought about asking, the state bird or the state flower. Those are pretty easy. To get an autographed copy of Gene's book, we're going to make you work. Here's the trivia question for this week. What is the state fossil of California? Yeah, the state of California has an official fossil, and it's not without controversy, by the way. I'll explain that next week. But if you think you know what the state fossil is and you'd like to get an autographed copy of Gene's book, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, your guess, and your mailing address so that if you're the first to get it right, we'll send you out an autographed copy of It's a Whole New Business. That's today's real estate trivia question. We're with the author of that awesome book, Gene Trowbridge. Let's take a quick diversion here, Gene. It's tough to write a book. It's pretty tough to come out with another edition and another edition. You've done 4 editions of the book. What changes?
Generally, what changes is the IRS, the SEC, their rules, and my volume of experience changes.
Okay.
Because throughout my book, I'll talk about something, and then I'll have a little block down at the bottom that I call a tip, a Trowbridge important point. And I'll talk about how this section applied in my business or in some clients I'm working with now, kind of bring it to life. In my Audible book, I go off too many times and talk about stuff like that. Well, it took me 18 months to write the first edition, and I finally just stopped.
Yeah.
I said, I'm going to be dead before I finish this,
It's
so
like
let's
painting the Golden
stop.
Gate Bridge. It
That's
just
the
always
first
has, yeah.
edition.
Yep.
And then this last edition that's out now was because in the last 2 years, the SEC has made changes. And so the chapter on securities laws had to be pretty much rewritten. So I took a chance to go through the whole book and change certain things.
Well, if you didn't win on Real Estate Trivia, you can pick up the book on Amazon easily. Also, there's an Audible version. But before you're done, we're going to probably give you a better way that you can get a hold of what's in this awesome book. What I love about it is because you are an attorney, you reference cases and you give examples, but it doesn't just come from the position of the legal side. You've been in this business. You know this business.
Well, that's true. And one of the things I've always done with my documents is try to take an approach that my documents are written in plain English.
Yeah.
And so I tried to write my book in as much plain English, because if you can understand, when I wrote the first edition, my audience was real estate brokers.
Yeah.
And they didn't know anything about it. That's the title. It's a whole new business. What I wanted them to know is when you sell a property to someone, you're doing real estate.
Yeah.
When you syndicate a deal, you've stepped into a brand new business, which is the securities laws. So understand that you're over here now. You're not back there. And there's a lot of rules you need to know.
Well, specifically, Gene, let's talk about the fact that rules vary from state to state. We have listeners in 190 countries. There are typically securities laws in every country, so you'd want to find a good lawyer. But how does it work when someone is raising money for a property in one state and most of their investors come from another state?
Luckily, these rules we work with for the most part are federal rules. And you can understand if everyone is one state, the property, the sponsor, and the investors, and something goes wrong, it's pretty easy to know where they go to court.
Yeah.
But if I'm doing a property in Kansas and I have investors in Oklahoma and Texas and I'm in California, where do you go to court?
Right.
You go to federal court. So our documents are federal laws, and for the most part, the regulation under which we write our documents, Regulation D, preempts all the state laws. When I started, we had to write a blurb about every state that I thought I was going to raise money from an investor in.
Yeah.
And that all went away in 1982. Reg D came out and said, we're going to take charge. We're the big boys. Something goes wrong, just call us. But that doesn't stop the state from wanting to know if I am coming into their state and raising money from their citizens. So I do have to file what's called a state notice. But other than that, nothing, which makes it a lot easier.
It's a little daunting for new syndicators when they realize they have to work with a securities lawyer and that the Securities and Exchange Commission is involved. But in reality, mostly syndicators are looking for an exemption from security law. Can you talk about that?
Well, yes. The rule is that every security has to be registered with the SEC unless you use the word exemption, unless it's exempt. Well, the biggest exemption in the law is Regulation D.
Yeah.
And that's how we do all of our business under Regulation D. And as I mentioned to you in the hallway the other day at a break, the last time the SEC reported to the public on the volume of transactions in Regulation D for 12 months is $1.8 trillion.
Yeah.
That's more than all of the IPOs. It's actually 3 times more than all of the IPOs on Wall Street during the same period of time. And only 300 billion of that is real estate. So there's a big market out there. But every business who needs to raise capital and doesn't want to go to Wall Street goes to Regulation D, the private placement business. It's just amazing how I've done racehorse offerings, I've done wine producing, I've done the dreaded cannabis, I've done all those things, but primarily my business is real estate.
Well, and that's your focus. And obviously we're a real estate show, but you're right. And that's a great illustration that a lot more gets syndicated than just real estate.
Absolutely.
This is a tool to create a team environment where there's folks that are running the investment and there's folks that are passively investing. But for the folks that are passively investing, now they're not the ones that would engage you, but they might read your documentation, not even knowing it's you. Any advice for what they should be looking at when they find an investment like this and they're given this big stack of documents?
Well, I'd go back to those same questions. I'd have them look at who is the sponsor. Is there continuity? I'd have them look at the track record. I'd have them look at the skin in the game. How much is the sponsor going to put in? And then I'd have them look at the liquidity provisions in the documents for them, because there are voluntary liquidity episodes that come up. I want to give my shares to my kids, and then there are involuntary. I just went through bankruptcy and the court's going to take all this. How does that work? And you notice I haven't mentioned NOI.
Right.
Yeah, that's something else. We need to get the basics done, and then you can look at the slide deck or the investment summary and see if it's a piece of real estate you want to invest in, which, there's this word sophisticated, and I don't want to get into it too much, but I think the investor should take some responsibility to be sophisticated, to know something about the asset class in which they're going to invest. I have clients who go from apartments into mobile home parks and take the same investors. And I wonder, well, I might have seen this investor be sophisticated over here, but what the hell does he know about mobile home parks?
Right.
And that's on the investor, because I don't think you can require the sponsor to educate. Or so the investor comes to your events and learns about apartments. There you go. Take some action yourself to learn about the asset type you're going to invest in.
All right. Love that. Now, as an attorney, you deal with this element of the transaction, but often there's other attorneys involved. There might be a transactional attorney for the land. There might be an attorney that is part of the company and asset protection. How do you interface with the other legal team, or do you?
I do. I'm practicing federal law, and it's limited to the securities.
Yeah.
So when the client is my client is going to write a letter of intent and have it converted to a purchase and sale agreement and go through the closing, unless they're in California, I can't deal with that because it's state law. So they need another attorney. Then I will get involved with that attorney. That's probably the one I deal with the most, because that attorney will take the documents to the lender, and the lender will say, I don't like that single purpose entity clause you have in there. Here's our boilerplate. And here comes back from the real estate attorney I never talked to the lender.
Yeah.
I don't have to. Who says you need to change your document, or the tenant in common agreement isn't what the lender wants. So I get feedback from that transactional lawyer, and those people are really sharp, but I don't practice in the area other than just simply securities.
Well, that brings up another point, Gene, which is there is this perception among syndicators that, once you have the documentation, you can just kind of global search and replace. But in reality, every private placement is unique. It is just tailored for that investment. Can you speak to that?
Yes. I've been an expert witness a few times, and I hate it. I don't do it anymore. Yeah. But the few times I was an expert witness, the issue was, is this document just plain boilerplate stuff?
Yeah.
Or is it specific? Could an investor really tell? Can the judge really tell what the investment is? And every time that I've been asked to be an expert, I've always been on the side where this is a boilerplate and the investor couldn't possibly have known everything. And if the judge can't figure out what the offering is, what the property is, you're in trouble.
Yeah.
You're in trouble. We don't like to see anyone get in trouble, but you are in trouble. It's one thing to say we don't want anyone to get in trouble, and I don't mean that. I just don't want the sponsor to get in trouble. No one wants the investors to get in trouble either.
Right.
You know, we're somewhat of a gatekeeper to this whole industry as a securities attorney. A lot of attorneys out there. But there's a small group that can do securities law, and part of it is E&O insurance. Part of it is their big firm won't let them do securities law because they don't have E&O insurance for securities law. So there's a small group, and we have to be pretty careful that our part of the industry stays strong.
Yeah. So in our few moments remaining, you have dealt with a lot of folks who have gone from naive beginner to now successful syndicator. What are some of the things that you've seen syndicators do that you wish you could have told them before? Hey, avoid this. How do you stay out of trouble? What are some of the big problems you've seen?
Well, I think the first problem is not giving yourself enough time. Don't come to me when your 30-day due diligence is over and now you have 15 days to close the deal. I mean, I can't help you.
Yeah.
I just can't. So not giving yourself enough time. When you're going to venture into doing a blind pool where you're going to buy more than one property and you think it would be really cool to raise $10 million, why don't we start with 5? And if you hit 5, we can go to 7 and we can go to 10 automatically. But if you want to do 10 and you only raise 7, some people are thinking you're a failure, so you don't want to let them think you're a failure. Here's one other one I think that's coming up right now, because a lot of properties that were syndicated in the last 5 or 6 years now have a lot of equity. And some clients come to me and say, what I want to do is I want to refinance, give the people their money back, and then I'm going to take over and own the property forever. That's a huge conflict of interest problem. You're going to get your butt sued if you do that. Or coming into the deal where you say to the people, well, I'm just going to give you 8%, and at 3 years I'm going to pay you off and I'm going to own the property. No, you're not. You're not going to do that if you don't want to be sued. And actually, that gets you in the trap. If you do something just like that, Robert, the deal goes bad, you're going to get sued because the court's going to say that was a loan. And now it's a loan liability as opposed to just an equity deal. Well, bad things happened. Now you signed and it's a loan. It's very much trouble. So read your documents. A lot of it is just having enough time. I know you've waited 3 weeks for me to give you your documents, and you've got people with checkbooks in their hand ready to write checks. Would you take another 3 hours and make sure we've got what you want?
Great stuff. Well, Gene's book is called It's a Whole New Business, and you can find it online, or if you'll send an email to Trowbridge, that's T-R-O-W, Bridge, Trowbridge, at realestateguysradio.com. Gene has decided for our listeners that we're going to send you a PDF copy of the whole book. That is awesome, my friend. Thank you for that.
You're welcome.
And that's also will give you Gene's contact information if you're interested in learning more or setting up an appointment. Gene, this has been awesome. Thanks so much for being on the program.
Robert, thanks for taking the time and having me.
There's Gene Trowbridge. When we come back, you're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to EQRP@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to EQRP@realestateguysradio.com today.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hi, this is Darren Hardy, author of The Compound Effect, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Hey, if you ever wanted to do bigger deals using other people's money, then come on out to the Secrets of Successful Syndication. We're doing it again in September in Dallas, Texas. All the details on our website at realestateguysradio.com under events. Well, it was an awesome syndication event back in March, and we've had Gene at our events before, but this was the first time that we got to spend this much time with him and get a chance to get him on the radio program. Great to hear from a guy with that much seat knowledge.
Yeah, it's funny. Over the years, we've had a chance to interview a couple of guys that have been around even longer than us and have been involved in syndication even longer than us. We're getting to be like the godfathers of this thing. We've been promoting it for quite a while, but Sam Freshman and Gene Trowbridge are two guys when I first got into this business that I looked up to and said, wow, these are guys that are really well known, that are doing a good job, have great reputations. And, you know, when people get to kind of the latter phases of their career, there's a new generation of people that kind of come up and all that's exciting. But it's always fun to go back. I miss those conversations we used to have with your dad from time to time when he was still with us, because there's a perspective you get when you have decades of experience in a space and you've been through the ups and downs, changes of presidential administrations, congressional administrations, wars and peace, and high interest rates and low interest rates and recessions and maybe quasi-depressions and passive Fed, overactive Fed, just the list goes on. And somehow, some way, these guys have managed to navigate all that, pick up lessons along the way. And when you get a chance to sit down with them and talk shop, just really good stuff comes out. And, you know, Gene obviously shared a few really good tips with us as he was sharing from his experience over the decades.
You know, you mentioned Sam Freshman. Sam Freshman really did write the book on real estate syndication, the textbook that most universities use to teach real estate syndication, principles of real estate syndication. And then Gene's book, It's a Whole New Business. Gene was really focused on educating real estate brokers about the business. But of course, then his book and his practice has taken on a life of its own. Today, he helps syndicators figure it out, or folks that are interested in syndicating. I love the methodical way he goes about interviewing someone who's new to this business and pulling out and culling and recognizing that although they may not have a lot of syndication experience, their other experience is super valuable when you cross over that line and start raising other people's money.
Yeah, absolutely. I mean, we spend time talking with a lot of syndicators, obviously, in our syndication seminar and our syndication mentoring club. And we talk a lot about how everything is a process. And when you're used to doing something and you're used to doing something at a high level, you identify patterns and ways of doing things that are the most efficient, that produce the most predictable results. You know, the McDonald's restaurant model. McDonald's figured out a way to run a very profitable hamburger stand using teenage labor, and they were able to replicate that over and over and over again, which is what scaling is all about. And so you could hear from Gene's experience that he'd worked out processes as ways to do that. I do have one thing, Robert, that I want to make sure everybody understands, because some people think, hey, I don't need all that. I'm just putting together a little bit of, friends and family money. I'm going to go do a deal or whatever.
Yep.
I don't want to go spend a bunch of money with lawyers and documents and all that. And one thing I don't think that was covered that needs to be addressed is really what makes it a security. And again, I'm not a lawyer, so I'm not giving legal advice, but I've heard the lawyers say this many, many times. If you take somebody else's money to put it in a deal and they are depending completely upon you to get the profit. In other words, you're going to run the deal, you're responsible for everything. That is essentially a security, and it doesn't matter what form of title you put them on or how you organize it. At the end of the day, if they're passive, it's a security. And so if you're out there doing those kind of deals and you don't think that you need a lawyer involved, you don't think that you need to treat it in compliance with securities law, you might be mistaken. It would be worth spending a few $100s to run your structure by an experienced securities attorney and say, hey, am I cool, or is there some disclosures and some paperwork I need to fill out here? Because the last thing you want to have is, if a deal goes sideways, is the government come knocking at your door going, hey, you're selling unregistered securities, because that's a big problem.
A great start might be to read Gene's 4th edition of It's a Whole New Business, his book on syndication. And as you heard, he was kind enough to make a free PDF copy available to our listeners. That's awesome. And if you'd like that, all you have to do is send an email to Trowbridge. That's his last name, T-R-O-W, Bridge, Trowbridge, at realestateguysradio.com. Now, the only hesitation I have, and I love Gene's heart to just give the book away, the only hesitation I have is when you get something for free, sometimes you don't take it as seriously. So either go to Amazon and buy the book, which would be awesome, or pretend you did, right? When you get the book via PDF, act as though you just spent $30 on it so that you'll take it seriously. And you'll discover pretty quickly that the tone of Gene's book definitely comes from his perspective and experience as an active syndicator, but even moreover as an attorney. And it's not going to scare you away, but it will give you some great ideas. And then mark your calendars. We're going to be bringing the secrets of successful syndication back to Dallas, Texas in September. And Russ, I'm going to guess it is going to be our biggest one yet.
Well, I think so. Speaking of attorneys and guys with gobs of experience, we just confirmed that attorney George Ross, who spent decades as Donald Trump, not President Donald Trump, but real estate mogul Donald Trump's personal attorney. If you are old enough to have remembered the old original Apprentice series, and there was an older gentleman that sat on the panel there with Mr. Trump, it was George Ross. And so we've gotten a chance to get to know George over the years, and he's a brilliant real estate attorney. He's been putting together deals, more deals than you can imagine. He's well into his 90s now, and yet he's sharp as a tack. We're super excited to have him. So this is your opportunity to come hear from one of the absolute legends in the business. We're expecting several hundred people. For those of you that don't know, the last one we did in March, we had 300 people. The room was completely packed and sold out, and we had 40 people on the waiting list that we had to turn away. So we don't want that to be you. And of course, at all of our events, the best time to sign up is early. If you're hearing this radio show and podcast when it was first released, then we're probably still in the super early bird. So, $30 is exciting to make you feel like you need to read a book. I think it's a little bit more than that to come to the seminar, but it's 2 full days with a whole bunch of great people. We're going to have a lot of students that have kind of gone through this program and gone on to raise tens, in some cases hundreds of millions of dollars. You get a chance to meet them, pick their brains. We are a very inclusive group. It's really, really fun, room full of all the right people. Come join us. Just go to realestateguysradio.com. Click under events and look for Secrets of Successful Syndication, or send an email to syndication@realestateguysradio.com. Get all the details. We'd love to have you there with us.
Whether you're ready to step up to real estate syndication, or you'd consider passively investing alongside some syndicators to do bigger deals, the event's going to be a perfect place for you to be, and you get a chance to meet George Ross, who is just a character. Love that guy. Hey, big thanks to Gene Trowbridge for sharing his knowledge and years of experience with us, and for providing that great gift to our listeners. Next week, we'll take a different turn, but you're going to dig that show. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, Call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.